Hi, Melissa. Well, I think the PPI is not really the focus of the market today. It's really all about paring back some of those Ukraine and Russia fears. And by the way, the reason why the market sold off last week was not because we were so fearful that Russia-Ukraine is going to fundamentally derail the U.S. market, but that was just one more thing to worry about on top of CPI, on top of the Fed that's really not doing a great job communicating. So the fact that we're taking a little bit of that risk off the table today, I think that goes a long way. And broadly speaking, Melissa, I'll say that it seems to me that investors want to be buyers in this market. I mean, if you think about just how much the valuations have reset, how much froth has been worked out of the market. And then if you look at positioning, and the Nasdaq is leading on the way up today, and technology shares, and so many fund managers, so many hedge funds have actually gone underweight technology. So it doesn't surprise me that you get a little bit of a positive risk on move to the markets, and we're stepping right back into the areas that got so beaten up right now. And by the way, there's some positive catalysts besides Ukraine and Russia, and we're starting to get information that supply chain bottlenecks are maybe starting to ease a little bit. You got earnings season, so I think there's a pretty big and broad risk-on move here today.
Yeah, Dr. J, do you think sentiment, I mean, the point that Tom Lee of Fundstrat would make is that sentiment has gotten so bad that it's actually good. And he points specifically to the work of his technician, Mark Newton, who says that the put-call ratio was at such extremes that it's actually a good indicator, a sign that we may have hit bottom.
Exactly, Melissa. And one of the reasons for that, and his strategist is exactly right, put-call ratio is, of course, the number of puts traded to the number of calls. And normal is somewhere between 0.7 and 0.9, perhaps. In other words, people usually speculate and trade calls more than they trade puts. When that ratio goes heavier on the put side, when you're at 1.5, 2 puts to 1 call, well, then you're sitting there saying, well, that's one of those inflection points potentially. And so I applaud them for picking that up. I do think when you get overly pessimistic, you are due for at least a bounce, Melissa. We got up to 33 almost in the VIX last week, I believe. We were seeing a lot of speculative put buying, if not just outright people dumping stocks and calls. And I would say that as much as, the inflation indicators are out there, flashing warning signs and so forth, most of us think that's going to pull back over the next several months, at least I do. And one of the things that was front and center for me was Ukraine, and the fact now that we've had a pullback from there, a major negative catalyst. And this is not like saying, oh, let's just dismiss it and we're just going to go off and run. But pulling back, going towards diplomatic is going to be much better for market sentiment going forward, especially if that continues, Melissa, for another 2-3 days. Then I think we'll see the VIX more like 20 than 33 like last week.